Hi, welcome to this episode of Founders Journey on insurtech.io. And today I have a special guest, and his name is Zach Townsend. How are you, Zach?
I'm great. Happy to be here, Jeff.
Just some backdrop. This is the first time Zach and I actually chatted, and before we hit record, him and I were chatting for 15 minutes. And I am pretty excited to talk about this episode because you have a very, very interesting career before your new company, and I am pretty excited to see what you're going to do with your new company that you founded. So, for our audience who don't know you, Zach, go ahead and take on the mic and give us a brief background of what you have done and your new company, Meanwell.
Yeah, as you said, Jeff, I've done a bunch of different things in my career. I really started actually in the government space. I was a technologist, a data scientist. I was the head of innovation for the city of Newark, New Jersey, when Cory Booker was the mayor there. And part of my portfolio was financial inclusion. Like, why do people in West Newark not have bank accounts, check cashing, payments, things like that? So when Corey decided to run for Senate in like 2012, 2013, I really just developed a passion for fintech. So I moved out here to San Francisco in 2013, and I was employee 36 at Stripe, the now giant credit card processor. And then pretty quickly, I realized I like had that entrepreneurial bug, really wanted to start my own thing. I actually think it can be quite hard being in a really like small company, if you're the type of person who like wants to do your own thing. In retrospect, obviously, Stripe was like one of the fastest growing companies ever, and I probably should have stayed. But me and a buddy I left Stripe and he left his gig, and we started a company called Standard Treasury. Standard Treasury built through a banking infrastructure between fintech companies like Stripe and big banks like JP Morgan and Goldman Sachs, and Silicon Valley Bank. And that business, we went through Y Combinator. We raised like $7 million seed round, which included like Andreessen Horowitz, Index Ventures, and um, Data Collective, and all sorts of folks. We ran that business from 2013 through 2015, and we were basically too early. This market has actually really matured. Three of our eight employees have gone on to found like the same company as a successor company, and have raised tens of millions of dollars of funding. So we had this amazing idea, but we're just like too early to the market, which is a real lesson about entrepreneurship. Timing is also really important. And we ended up selling that business to Silicon Valley Bank in 2015, which was a going concern at the time and a very well respected institution. It blew up like 7 years later. Um, but that was, my first entrepreneurial experience, that was like on the order of a startup and venture funding. Learned a lot, recruited a great team, made a ton of mistakes. And then basically for the years after that, I got married, I had kids, I was recovering from entrepreneurship. I did a few years at McKinsey, being a leader in the North American fintech practice. Although I had a pretty unusual job, which people don't even know folks at McKinsey did, which is I would like go build new businesses at clients. So you have like big company X, and they're thinking about like a startup or a new business unit inside the company. And I would go be like CEO or GM of that entity, and work on it for like 6 months and then get an executive handed to me who I would then train to replace myself and then I would leave. And that also was a great lesson in entrepreneurship because basically big companies don't know how to build anything and ship it. But if you build and ship something inside a big company, they can sell the hell out of it. So I did that three times, and each of those three businesses, we got to $25 million plus in GMV, like in less than a year, which is like crazy in startup land. But they like have all these relationships, they have all these sales motions and salespeople. They just need great products, and that's the challenge in companies. Like, how do you actually big companies like how do you actually do anything new? My co-founder and I'm happy to tell you about his story and how we know each other. We started this insurtech called Meanwhile in January 2022.
A lot to unpack there. And let's start with the idea. What made you say, hey, you know what? I am in the heart of Silicon Valley, Bay Area, where all the innovation is happening. I come from background of fintech. You know what? I should dabble into insurtech because, of course, what Meanwhile is. But let's start with the idea. Who came up with the idea?
I came up with the idea, but honestly, what was we've learned a lot. Uh, 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 to give just to very briefly say what it is, and then I'll explain it all. Which is like we're a full stack insurance company, a life insurance company, and then we're using crypto, particularly Bitcoin, and eventually probably stablecoins to be the like go to market strategy and also the differentiator. I had been thinking about life insurance for a long time. In my first company, as I mentioned, we like built tech infrastructure between fintech companies and banks. And there was a brief, crazy time where we were like, it's so frustrating to work with banks, we can start a bank. Um, and this is a time when there like people were starting banks in the UK, and we considered starting a bank in the UK. And actually, one of the successor companies I mentioned is a company called Griffin, which one of our employees from Standard Treasury moved to the UK and started a bank. So we actually did that version of the idea. Um, and so after I had exited that company, I was thinking a lot about what it would mean to be a bank that was entirely driven by APIs. And what that would mean is that you don't actually have any customer acquisition. You are just like white label to fintechs. And one question about what you running a bank in that context is, what do you do with your balance sheet? So it's clear that you can like collect deposits, you can do a lot of payments, but then you have to actually like make loans. That's how banks make money, right? Is like doing mortgages and stuff. And in that process, I started to think about life insurance. A life insurer is like the perfect bank because you can actually match the assets you have, like mortgages or 10-year corporate debt, with your liabilities, which are like life insurance and annuities. And by the way, I mean, I was having this idea in like 2015, but obviously, every private equity firm in the world that focuses on credit has realized this and like has started a life insurance company for this reason, right? So like Apollo has Athene and Blue Owl bought Kuvar and KKR is Global Atlantic. Everyone has this realization that there's something really interesting about the balance sheets of life insurers. So that had been in the back of my mind for years, but the problem is being a technology first life insurer doesn't actually get you anywhere. It gets you somewhere if you're big, right? So if you have a billions and billions and billions of dollars under management, being more efficient can really matter because you have like higher returns on equity, you have higher margin, but that isn't a way to gain market share. Because whether it's an agent or a customer, like they don't really care if you're a little bit better. um, so I never really like had like what's the go to market motion that's going to let me start a tech first life insurer. So anyway, this is like something I'm thinking about. And then my co-founder and I, just for context, we were like old friends. We met in 2009 at a mutual friends party in New York City. Like he came to my wedding. He did some contracting work for my first startup. Like he's a amazing engineer, very curious guy, and close friend. So nearly 15 years of knowing each other, or 13 years of knowing each other when we started this business. And we were the type of people who were getting together every 6 months and being like, "Do you have an idea? Are you ready to leave your job? Like, I have an idea, But like, it never like matched up. And then in late 2021, it was like matching up. We both wanted to leave our jobs, and we were sort of exploring. We started to think about crypto as a almost like a country. So it's weird, it's decentralized, it's like global, whatever, but it's like a country. And then we're like, what are the financial institutions that exist in every country in the world? And how would we build those for crypto? Because we're super comfortable with regulatory stuff. That was like what we thought was our competitive advantage, is like a willingness to slog through regulatory hell. Um, so we wrote a list and we were like, there's payments companies, there are exchanges, there's banks. And we didn't actually find anything on that list that like someone wasn't already doing. We were really like stuck. We weren't sure what to do. We were like writing all these different memos. And all the way back to your question, like who thought of the idea? I like had a flash of genius. I woke up in the middle of the night, like 2 in the morning, like shot up out of bed. And I was like, there should be a crypto life insurance company. Like merging these like two like different sets of ideas we had. And I went to my desk and I got on my laptop and I wrote a memo that and that memo is both how we like raised our original seed round from Sam Altman, and it's actually basically exactly what we've done, which is itself pretty crazy. So we're 3 years in, and that first memo was pretty accurate. We've built a completely operational full stack carrier denominated in Bitcoin.
I'm gonna expand on the last thing you just said. Your seed round, one of your investors, Sam Altman, founder of OpenAI. How did that conversation happen? Like, did you have a relationship with him, like friends, or was he just one of the pitch that came back to you and says, "Oh, we like this pitch." Like, can you
Yeah.
talk a little bit about the and how many people are in your seed rounds? Thank you for watching this video. Now a quick message from our sponsor, Mav.
Thanks, Jeff. I want to let you all in on a secret that top producing agencies don't want you to know about. If you're in P&C insurance, you know firsthand how much you're getting squeezed by your call center. It's becoming less predictable and less economically profitable to scale. But here's the thing. The top producing agencies making over $100 million are not running their leads through a human-based call center. They're running them through an AI expert like Mav to qualify, quote, and hand deliver the highest intent qualified leads to your agents. Mav takes care of the back and forth, having unlimited 24/7 conversations with your leads that are personal and relevant so you can scale to the moon. Ready to ditch your call center and 10x your agency? We're giving the listeners of insurtech's $15,000 worth of credit to try Mav. Head to hiremav.com/insurtechs to claim this offer.
So let me answer first, like just tell you like how the seed round happened. So it's early January 2022, and my advice to I'm a second time founder. I know a lot of people in the Valley. I didn't know Sam very well. Like we knew each other vaguely through Y Combinator. I'd had some office hours with him. This was before he was president of YC. We aren't particularly close, but like also like maybe we've emailed 5 times over 10 years, right? Like he knows who I am. I think it's also important to note that although Sam was very well connected, and I am very well respected, and I loved, how knowledgeable he was, he wasn't yet like Sam Altman, one of the most important people in the world in January 2022. Like ChatGPT hadn't come out. Um, it was, but he was a very important, influential figure in Silicon Valley. But here's how my seed round went. What I understood, and this is really an advice I give if you know enough people that you can have the meetings, is you want to like sort of gain momentum. So we started the first week of January, and we're like, okay, we're going to talk to angels we know. We're going to talk to people who invested in my first company or invested in Max's previous company. And most of these people write like 25K checks, 50K checks, 100K checks. Um, and what'll happen if you talk to enough of those people is they're like, oh, I'm going to refer you to my friend at Lightspeed or my friend at Sequoia. And then we were sort of playing coy is we're like, okay, we're going to have all of our conversations with big funds about this seed round like the third week of January, because you don't want to talk to like one person and then another person and then the third person and the first person says no and everyone sort of knows. You like want to try and like talk to as many people as possible at once so you can have a competitive process, and there's FOMO and people are worried. So that's the process we were setting up. So we're talking to angel investors that are involved. And to answer that question, how many people end up being involved? Like too many, 40 maybe, 30. There's like Parker Conrad, the CEO of Rippling. There's Dylan Field, the CEO of Figma. Zach Abrams, who at the time was the chief product officer at Brex, now the CEO, founder of Bridge, insurtech people, Sam Hodges from Vouch, Sean Harper from Kin. Anyway, so this whole range of people. And then so there's like momentum. There's people are talking about the fact that we're raising a seed round. We don't yet have a lead, but we're gonna like talk to everyone the third week. I'm just like, so my calendar's packed, right? With Lightspeed, Sequoia, Founders Fund, everyone. And then before that week comes, Lockie, who is a sort of like solo venture capitalist, approached me and said, "Hey, I'm really interested in this. Like, we work together at Stripe." So I gave him the pitch, and then he called me the next day and said, "Hey, I just mentioned this to Sam because he like is close to Sam, and Sam wants to chat with you. You want to like can you get on the phone with Sam tonight?" So then Sam, I wish I wrote down the questions. Like Sam, he's like so sharp. He's like so experienced with startups. He asks like 3 or 4 really pointed questions. And then he's like, great, Sam and Lockie, or Lockie and I want to co-lead the round. And I'm like, great, then I'm done. I don't have to have all these meetings with all these other people. And that was how we like raised the first $7 million.
I have a question, and I want to keep you on track, but it's an East Coast question. For someone that's not in the Bay Area, Silicon Valley, post-COVID, all of our meetings, whether it's, appointments or some kind of pitch, P, private equity, VC, whatever that is, we're doing over Zoom. Being in the Valley, pitching another person in the Valley, do
Actually,
you
when
guys
this
do it over
happened,
Zoom?
I was living in Austin at the time because we like
Okay,
COVID moved to Austin. So all
so you
this
guys
did
did all the
happen on
Zoom.
Zoom and phones. But I will say that like this story is just impossible to execute if you are a first-time entrepreneur who doesn't live in Silicon Valley. It's not that you have to live here, you have to have lived here. So I get asked sometimes, would I do Y Combinator again? Probably not. I didn't do it for a second coming. But that's different than if someone asked me, should I try to do Y Combinator? And my answer to that is like 100% yes. Like I went from GovTech, not even GovTech, just like I worked in the government to I founded a company, I sold it, and then like I know all these people already. But you have like, how do you go from not having those relationships to having those relationships? I honestly know no other path than grinding it out or like doing Y Combinator.
Tell us a little bit about that history of the Y Combinator, and now we'll bring you back to the path of Meanwhile.
My first company, yeah, standard. Or should I go back to Meanwhile? What was the question?
Oh, go back to a Y Combinator for a second, and then
Oh yeah. So in my first company, look, I'm the type of person who I was sort of interested in startups. Uh, there's this, it's much bigger now, but there's like this mini Reddit that YC runs called Hacker News. I actually got the Stripe job by like how did I know about Stripe? It was because I was sort of like paying attention to the startup ecosystem and I wanted to like go work at the biggest best fintech company I had. I could figure out. And yeah, I think my first co-founder, Dan and I think we applied to YC probably 4 times. And then the last time we got an interview and then we got accepted. Yeah, I think I don't know how to describe it. It's like both the best and worst experience of your life. This is like I was like, I don't know, 20, I was younger, 20 something, and I didn't have a wife or a girlfriend or kids. And just Paul Graham used to say, you only do 4 things in YC. You should eat, sleep, exercise, 5 things: eat, sleep, exercise, talk to users, and write code. And if it's not on that list, you shouldn't do it. And the crucible of YC is that you work your butt off all week long. You do everything you can to push your business forward. You're working so hard, and then you get together for like group office hours, which you should think of as like group therapy with all the other entrepreneurs, and then you spill out your story of like This is what I got done this week. This is all the challenges I have. And then basically the YC partners half counsel you, try to help you in your challenges, and half say, like, why didn't you do better? You grew 10% last week. What would have it taken to be 20? It's a really, really tough experience, but you get more done than you like can possibly imagine. And then yeah, you have demo day and you stand up in front of, I don't know, 500 or 1,000 venture capitalists and angel investors, and you pitch your business, right? So I didn't know any of those people, stood up, pitched the business, and then those people like pitch you to take your money. And then we raised, again, I actually forget the exact, $5 or $6 million for that first business.
That's incredible. How old were you when you raised your first round for your first startup?
Yeah, so 2013, so it would have been 27.
That's cool. All right. Now I think our audience been waiting for this. So tell us about Meanwell and what's the plan of execution that you got now that you got your seed round raised?
Yeah, I mean, we can talk through the sequence, but that was in January 22, and then in like early 23, we raised from like big insurance names. So Hudson Structure Capital Management, MS&AD, the big Japanese insurer, Moro, which is Santander's venture capital arm, et cetera. And that was another $13 million. So we've raised like $20.5 million to date. Yeah, look, the ultimate ambition is to build the world's largest life insurance company. Like Sam, by the way, I think maybe he cares about Bitcoin. I don't really know, but like that's his motivation is I think our ambition. And we are building life insurance tools like global from as much as we can from a regulatory contract, global from the start, all in our own tech stack. We have our own carrier, and we're using Bitcoin as a unique product. What does that mean in practice? What it means, like the ultimate vision is if you're concerned about inflation risk or regime risk or currency risk, you live in Argentina or Nigeria or Turkey or India or Pakistan, you like you don't buy life insurance in Argentina because you're going to live longer than the peso. Like, it just doesn't make sense, right? Or you've developed some wealth or some assets, and yeah, you're just worried about keeping them in your jurisdiction, right? So the idea of buying life insurance in this global decentralized currency of Bitcoin is like really compelling. And I don't want to get political, but like you might feel that way in the United States, vis-a-vis inflation risk or regime risk or jurisdictional uncertainty, right? So and maybe you felt that way in the last administration, maybe you felt that way in this administration, but anyway, people feel that from a variety of different perspectives. So what we have built is we have a licensed and regulated life insurance company in Bermuda. We are licensed by the BMA, and we have to do everything an insurance company does, right? So, we have a chief risk officer, a chief compliance officer, an independent board. We have like 17 corporate policies, 950 corporate control. Like it's an insurance company. And what's unique about that insurance company is that instead of being in dollars or euros or yen or Swiss francs, it is denominated in Bitcoin as though Bitcoin were a currency. So we take premiums in Bitcoin from our customers, we pay claims in Bitcoin when they die, and then we do everything in between in Bitcoin. We do our audited financials, our like actuarial opinion, our reserves, our investments are not Bitcoin, but like are denominated in Bitcoin. They're like loans in Bitcoin. So we run a full stack life insurance company in Bitcoins instead of dollars. But what's cool about that is, which we didn't even really understand when we started the business, is we built our own policy admin system. We just built everything from scratch. We built our own underwriting. We built everything ourselves because that's the type of people we are. Two is when you have a unique product that, when you talk about like the product we have, but that no one else in the world has, then people are interested in talking to you and distributing it, right? Whereas if we just woke up and said, okay, we're going to start I don't know, a New York Life competitor on its own merits, no one wants to work with a dinky startup. They're like, well, New York Life has an A+ credit rating. Like, you have no credit rating. New York Life's been here for 300 years. Like, you've been here for barely 300 days. So, but we're able to like overcome that hump by doing something no one else does, which is being the world's first and only Bitcoin life insurer.
I am digesting and absorbing, putting down everything you're throwing out there, man. Because I have about $11 million life insurance myself, and 4 years ago when I bought those life insurance policies, 5 years ago, that was like a lot of money.
Yeah,
And
yeah, I actually say that. I
the
mean,
last four
that is still a
years,
lot of money, but if you bought a life insurance policy in 2020, when you did, you've
Bitcoin.
seen the purchasing power of that policy go down 20 or 30%. Whereas if you had bought that policy in Bitcoin, you've seen your purchasing power. Look, there's volatility, but actually that's part of the point that we talk to our users about is like, you don't have to know what the price of Bitcoin is going to do today or tomorrow or this month or this year. But like, do you think that the purchasing power of Bitcoin in 10 years, 20 years, 30 years, 40 years, when you're going to die, or by the way, when you're going to take a policy loan out of the policy, is it going to be more or less than it is now? Not day to day, but decade to decade. Um, so yeah, it's a powerful. There is this like connection between this global decentralized store of value and the idea of like storing some of your savings in that through life insurance.
And also, a lot of people look at tax purposes. Number one reason passing on wealth is tax purpose because life insurance is tax free. And if you have such an explosive product like Bitcoin, passing on through a state tax versus passing on through life insurance beneficiary is so different. Thank you for all your support to our channel. Here is a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
In some ways, our product is a dead simple limited pay whole life product. So you pay one Bitcoin, just to make the math simple, you make like one Bitcoin a year for 10 years, or you can prepay, it's up to you. And then we promise you a fixed guaranteed payout, 13, 15, depends on your age. But the tax benefits, the protection benefits, like the same things that Northwestern Mutual or Mass Mutual or New York Life or Lincoln would pitch you. Like, one is you get protection. Two is that 10 to 15 is happening income and interest income tax free. So even if you thought you could get the same yields doing yourself, it's compounding tax free. The third is you can take a policy loan against the policy. You can borrow Bitcoin out of the policy, even if Bitcoin's appreciated 10x, 100x, 1000x. So if you ever needed some liquidity from your Bitcoin, this is the perfect vehicle to do it. And the fourth thing we talk a lot about is that there's just like straight legacy management. And if you don't have a bunch of Bitcoin, you might not have thought, but like people have a hardware wallet, they've got keys. It's like can be really confusing. Like, how do I make sure my kids or my wife get my Bitcoin or get this store of value? And like we have a legal obligation as an life insurer to make sure that that value is transferred to the beneficiaries you put in the policy.
You guys are a custodian as well. You provide the custodian service of your
Well, we're not your
Bitcoin.
tax advisor. I just want to be clear.
Yeah, I get it. Do you have all three models like a term life, VUL, whole life, IUL within just the Bitcoin denomination?
No, actually, right now, the only product we have is this. We have a 10 pay whole life, right? So that's a non-max, like 70, Internal Revenue Code section 7702 compliant whole life policy. People don't know what that means, but if you know what it means, it's important. And then sometime this year, we're going to launch a dead simple fixed deferred annuity in Bitcoin. You like put one Bitcoin in, we give you a crediting rate. It's compounding over time. To the user, by the way, it might feel like an IUL or a VUL because they're putting the value of the policy in dollar terms goes up and down depending on the price of Bitcoin. But the actual product design is like from the 1830s. In some ways, it's super simple, right? Back to like you pay 10 Bitcoin, we promise you 15 when you die. It's just that we all hope that 15 Bitcoin will be worth a lot more in dollar terms than that 10 Bitcoin was worth when you put it in. The reason we haven't done term life is, you're an insurance guy. Lots of people listening are insurance folks. Like you understand that you actually have this real liability in the world, which is this risk that you're going to die. So at the end of 30 years, if my term life policy doesn't pay out, I still feel good I owned it because it was protection for my family to like pay off the mortgage to my house, right? So that you got a real benefit. But we didn't want to be in that situation because like crypto's new, people don't always trust it. They can feel like that feeling that that feeling that people might have that they've given something for nothing. Now that they didn't, they got protection. We just didn't want to be in that space. So that's why we haven't done term life. I think as we become bigger, more trusted, more established, like time goes on, then we could do term life. But we just thought the whole life product like really worked well for us in the beginning because fundamentally, no matter what happens, you get a payout.
So you guys have also read personal line product for life insurance. Do you guys have like key min policies, that type of things? Have all those things
Yeah,
worked
we
out?
haven't done Keyman because Keyman is much like term life. But we have done this is like getting into the nerdy stuff. We have done some company-owned life insurance. Now COLI is usually used as like a really clever tax arb with your pension plan and stuff. But what we've done is more like Keyman as COLI, right? So Jeff works for Jeff Inc. Jeff Inc. buys life insurance on Jeff, and like Jeff Inc. owns it. So we've done that for some miners, for some names in crypto. So it's like Keyman Insurance, but it's sort of basically the company is going to own it forever.
My next question. So let's just say Tesla want to buy 100 life insurance policy for their top engineers, top people,
Yeah.
right? Have you guys
From
run
your
into
lips
those
to God
situations?
ears, Jeff.
Have you guys
No,
run into
not
those
yet, not
situations?
yet, not yet. Yeah, more and more companies are interested in Bitcoin. We're fielding more and more of these types of conversations about Holy or group life.
Let's just say I own a policy, right? I bought my policy for 10 Bitcoin. I bought 10 Bitcoin and it's sitting in a pot under my name. And today I got this idea. I need to pull money out. Do you guys do the whole service where you allow me to borrow against my policy, convert it to US dollars for me to use it through a bank? Do you guys do the whole thing, or do you say, hey, we will let you borrow 80% or 70% or 50%, whatever that number is, and then we transfer the code, the key to your Bitcoin to this wallet, and then you have to go find a conversion on Coinbase somewhere, or do you
Yeah.
offer the whole conversion from dollars
Yeah. So
from Bitcoin to
just
fiat?
to take a step back, right? So in whole life, there is like you pay, and then there's like a savings account inside the product. In a dollar product, this is called the cash surrender value. We call it the Bitcoin surrender value. So in the early years, you've paid more than like the value of that's in your surrender value. So it's not, you can't like put 10 Bitcoin in today and like borrow 9 out, right? You like put of those 10 Bitcoin, you put like 1 in today, and then you put 1 in next year, and then like in the year 5, 10, 15 is when you like want to do those policy loans. Now, on the literal mechanics, the policy is about you take a loan out in Bitcoin. And by the way, you owe us back Bitcoin. And why that matters is because ultimately you don't really pay back the loan, right? We will lend you actually up to 90% of your surrender value. And then there's a bunch of math, but you can never owe us more than we owe you. And then eventually you just die. And the loan amount is netted against the face amount of the policy. Now, the actual mechanic of like what pops out at the end, yeah, we help people when they buy policies. Sometimes they really want to wire us dollars instead of just sending us Bitcoin, or maybe your benefit, your loved one, maybe they aren't going to be comfortable receiving Bitcoin. We have a services company that can convert those Bitcoin into dollars for you. That's not like a core business activity of ours. We're not in the exchange business, but like to facilitate um, convenience, we will help people get dollars. But the loan is denominated in Bitcoin. Like you owe us back Bitcoin. It's just that it's netted against the death benefit in the end.
So let's talk about the security for a second, if you're comfortable going there.
Yeah,
Custodians of people's Bitcoin, especially at the scale size you guys are going after, being the biggest life insurance company, which probably means being the biggest custodian, competing with guys like
well,
Michael
yeah,
Saylor.
we use big name brand custodians. We don't self custody. So we use Anchorage, which is the only custodian in the U.S. who's a nationally chartered trust company. We use Coinbase. Some of our international clients don't want us to use a U.S. custodian, so we use Zodia, which is a custodian owned by Standard Chartered. And on the security, I'll just selfishly say, it takes a lot to move Bitcoin around. There like many people in the company who have hardware keys and live in different places, have to all do video confirmation. Like that's the amazing thing about like Coinbase and Anchorage, is their security model is so robust. And that is both an assurance for our customers about like how seriously we take custody and how seriously we take security. It's also an assurance for me, right? Because I really want everyone in the world to know that you can't like break down my front door and kidnap me and get hundreds of Bitcoin. Like it is I can't myself even move Bitcoin around. Like a lot of people with a lot of different security measures have to be involved to do anything with the Bitcoin we have on our custody.
Sure, you and your co-founder have thought that part out. Security of the team is pretty important when you guys holding that much money, that much
Yeah, and
Bitcoin.
also like as I mentioned, we have people in Bermuda, we have people in New York, we have people who are remote. There's a lot of security around Bitcoin.
A fun question. When you guys vision this thing out and talking to investors or just each other in the office, well, how do you see the global growth of your product since you guys are aiming to be a global product? I mean, like Chinese life insurance company
Yeah,
are very big. There's like Middle East is
actually, you
growing
mentioned Chinese
fast.
life insurance companies. The analogy we use for our investors sometimes is like in the mid 90s, there was this huge growing economy, and that was China. And then Ping An was founded then. And Ping An is now like the third largest life insurer in the world, right? So it's gone from obscurity to riding the wave of this economic giant to being one of the world's largest. And that is the story we're telling. Like there is this crypto economy. It's global, it's decentralized. More and more people are interested in that store of value. More and more people are going to participate in that economic system. And then we've built the life insurer for that new economy. And yeah, as I mentioned, to like the middle class Argentinian person, so this is a person who does not have a Citibank account, is not a private wealth client at some Swiss bank. That person doesn't really have an option for life insurance right now, or long-term savings or an annuity. But that person may has already started to think about Bitcoin, think about maybe like US stablecoins as this tool to save and store value. We're doing the same. Like we think we can make the market even bigger.
How's the feedback from the insurtech community? I mean, you guys are in the Silicon Valley community, but now that you play in the insurance world, you're making new friends, Zach, like just like how we met, right? We met through the insurtech
Yeah.
community. How's the
Yeah,
feedback
I
from the
mean,
insurtech community?
I'd say that it's been really positive overall. Like we have, we have an amazing chief insurance officer. He was at New York Life for 22 years. He, led the third-party distribution, the Bully Coley business. He's an actuary. He led the individual life insurance business as his last job. We have a very experienced chief risk officer, chief proprietor, and those people are partially like already quite connected, but also I think that we're doing something that makes sense. Like we've had, actuaries say to us like, "Oh, I didn't think you could ever do something safe in crypto, but it's so clever to have the whole balance sheet end to end denominated in Bitcoin. Because then the price, if you're running a Swiss insurer, you don't ask yourself every day, what's the exchange rate between the dollar and the Swiss franc? And same for us. Like the company is safe because we've done this like seemingly crazier thing of being entirely in Bitcoin.
Well, that brings the next question. You ever see yourself expanding the life insurance product offering? So instead of offering in Bitcoin, you offering in a mixture of Pi, of layer two, layer threes coins like Ethereum and Solana and Cardano?
I think for us, Bitcoin is sort of different in that it isn't like a computational platform. It isn't it isn't, it really is just this scarce store of value. And we have to ask ourselves, like, which of these tokens are going to exist in 10 years, 20 years, 30 years? And I have a lot of like respect for Ethereum, Solana, Avalanche, but like which of those are going to win? Which of those are going to persist? I don't think that's something that I have a good sense of. So building a life insurance company in one of those tokens, I think is a bigger challenge. I think the thing we'll do not immediately next, but like if we were going to do another token, we'd do US stablecoins because to go back to that like middle class person in Argentina, like I think them coming to our website and making a rational allocation between like digital dollars and like digital, and Bitcoin, like makes a lot of sense.
They could hedge the bet.
Yeah, exactly.
Part of me just keep on wanting to go deep dive, but I think like, we're gonna have you back on for another episode and hear about the company's growth. So I'm looking forward to that episode, Zach, and I appreciate you coming on today.
Great. Thanks so much, Jeff. You have a good day.